Hi, everyone, and welcome to the Worth and Wealth seminars. My name is Jennifer Duran, Program Associate here at the Office of Economic Empowerment. And today, the webinar's topic is making the most of every dollar, quote unquote, budgeting. Before we jump in, I'd like to just provide a reminder that this meeting is being recorded, and you can read more about the disclaimer in the chat. I just dropped the disclaimer in the chat there. Also want to remind everyone that the recording, the slides, and some additional materials will be sent to everyone who registered in a follow-up email by the end of this week. So please be on the lookout for that. And if you have any questions, feel free to drop them in the chat. Our presenter for today will definitely take the time to answer any questions along the way and at the end as well. Also, without further ado, I would love to present our presenter for today, Samanda Morales, who is a certified financial coach and counselor and financial planner. She does it all, who has many years of experience in financial services and runs a company called Wealth&360, helping people get their finances together, and also co-founder of a nonprofit called Ahora Inc., just helping low-income participants also make better decisions with their finances. So we're really happy to have her here today, and I'll let her talk a little bit more about herself. Thank you, everyone.
Thank you so much, Jennifer. And I want to thank everyone that took time out of their day to join us in today's webinar of making the most of every dollar. And I am going to go ahead and start sharing my presentation. I wanted to just share a little bit more about myself. I know Jennifer provided a brief presentation, but just so you know who's talking, I just wanted to share a few things that about my professional career and something on my personal side. I've been in financial services for over 20 years, working in the mutual fund and investment aspect of the financial services industry. I'm an accredited financial counselor, certified financial coach, but also a registered investment advisor. I just wanted to make sure that the individuals that I work with, that I have the knowledge, but also the tools in place to be able to support any individuals I work with in their journey to build wealth. As Jennifer mentioned, I'm a founder of Wealth&360, which is a financial planning and investment management firm, and I work with young professionals, first generation wealth builders and business owners, and also the co-founder of Ahora Inc., where we seek to empower individuals with a financial literacy and financial empowerment to have a successful financial life. I'm also very passionate about building the next generation, and I'm the chair of the board of trustees at Salem State University, which is the university I attended. So I work with a lot of individuals and faculties to empower that next generation of leaders here in Massachusetts. And my mission is to, I'm going to use the word empower a lot because that's what I seek, and is to bring a clarity, confidence, and control of everyone and their finances in their path that they have toward building wealth. On a personal note, I really enjoy walking the beach, learning something new every day, and exploring new places with my husband and kids. And I put a picture of the beach. I recently went to the Dominican Republic. My father lives there. That's where I'm originally from. And that's my happy place. The beach, the pool, and the nice warm weather is where I'm happy, and I can't wait to go back. So if you can take a few seconds, and if you don't mind sharing in the chat, what's your happy place? Is it the beach, the mountain, or the city? So it'll be nice to hear that from everyone. How about you, Jennifer? What's your happy place?
Definitely the beach. Always. Yep.
Awesome. We'll have some consensus there. So I love the feedback. Um, okay, so what our learning objectives are for today is one, understanding where money goes. And is that's tracking them daily and weekly, where we spend it and where our money is going. That sometimes we know and sometimes we don't even know. We are also going to talk about different budgeting methods and how we can choose one that fits our lifestyle. And how can we create a simple budget that you can start using right away? So, those are my three objectives for today. So, before I continue, I wanted to ask you, when was the last time you reviewed your money? Or where was the last time you actually found out where your money went? Oh, sorry, that's the wrong question. Sorry about that. Um, the question is, when you hear the word budget, what comes to mind? And please disregard the question on the screen. My presentation did not update. When you hear the word budget, what comes to mind?
We have some responses coming in on the poll, so we'll give it a few more
Yeah, is
seconds.
it restriction, brings control, gives you stress, you brings you freedom, or just brings you confusion?
Just a few more seconds on the poll for everyone to answer. So I'll share the results. Here you go.
Okay, so budget comes to mind control, knowing where your money goes, and it is a great feedback. And it also, I can see some 18% feel stress and overwhelming, and that can also bring stress. So I completely agree with that. One, it can give you control. Two, but it can feel overwhelming, just not knowing where your money's going, but also staying on track on keeping track of where your money goes. So I thank you everyone for responding that the question. So to try to avoid that confusion but the overwhelming, um, let's understand first the importance of knowing and understanding where your money goes and why it matters. Um, it actually gives you control, which is what some of you responded, and brings you awareness, and you can see what kind of change are you making in your cash flow on a monthly basis and how to measure that change, knowing where he goes and where he's coming from. It also helps you spot spending that you may not necessarily have in your mind on a day-to-day basis, like subscriptions that sometimes we sign up for and we completely forget that we're paying for a subscription that for an application or a service that we're not even using. So going through that spending on a daily, weekly, or monthly basis will give us that understanding, but also highlight those spending um, subscriptions that we have that we may not even remember. We can also measure how much are we spending when we go out or any other fees that we're paying for things like the gym or overdraft fees, things that are coming out of our bank account that we may not realize on a day-to-day basis. But while we go through that tracking process, we can see where those things are going. And it also helps us reduce our stress because now instead of wondering where our money's going, we actually know where it's going, and then we can make adjustments accordingly. And I also wanted to share three key messages here before we continue is that, as I said last week, cash flow tracking, it's not a budget. Tracking shows what has already happened. It gives you a rear view mirror um, happenings, but a budget gives you what's coming forward. What is your GPS? Where are you going, and where your plan is going, and then you can adjust your budget accordingly. So again, cash flow tracking, what has already happened. budget, it's a plan to help you move forward and understand where your money's going. And that way you can maximize the income that you have. So I want to say, take a few seconds now that if you have any questions or any comments during the presentation, please put them in the chat, and Jennifer will keep an eye on the of any questions or any comments that are coming in. And then during the presentation, I want to pause and ensure that I address any questions that you have, or provide a feedback on any of your comments. So please feel free to do that. So now I want to talk about what a budget is and what a budget is not. A budget is a plan of how you're going to spend your money. How are you going to save and invest your money? It's a tool to prioritize and understand the needs that come first, the wants, and then also a tool that helps you achieve your goals. A budget is also flexible. It can be adjusted depending on what's happening in your life. If you change jobs, or something happened in your personal life, it has to be flexible and adjustable. And it's also a way to tell you where your money is going, again, instead of you wondering where it went. And for me, I see a budget as a path to financial freedom and reduce stress, because you already know where your money's going before you even spend it. Um, and a budget, it's not a punishment or a restriction. Um, I hear personally a lot of people that believe that, or feel that budget is restrictive, and it's like, oh, I can't spend money. So it should not feel like a punishment when you have a budget. And a budget, it's not something that you set and it's done. You It can be adjusted. It's something that is not just set in stone. It's a living document that you update on a daily basis. And then a budget, it's not just for people that are struggling with money. It's also for people that want to plan ahead and understand where their finances are going, um, instead of reacting to it. And budget is not just about cutting back. It's about making room to what matters. And I remember, and I hear some people, and it has happened in my own family circle, that people say, "Oh, I can't do X because I'm broke." That's not the mindset that I have, or that I recommend for us to have. It's just that it's not within my budget right now. I don't have room for that particular activity or that particular spending in my budget this month. So that's how I will look at that budget. How do I maximize it? But I also, how do I plan to achieve the things that I need today, but also next month and next year? And it's not the same as tracking spending, as I said earlier. It's about looking forward. The budget is that financial GPS that guides you toward your goals. It gives you that financial freedom, because now have more control of where you're spending your money. And it gives you that control at the end of the month, at the end of the week, depending how you manages your finances. So now that we understand what a budget is, what a budget is not, and what a budget should be intended to be used for, I want to go over budgeting methods, because there are different methods, and there isn't one better than the other. The methods will be best for you depending on your lifestyle, depending on your on how what works best for you. So some of the main, or the more common budgeting methods are 50-30-20 rule. 50% is going toward your essential needs, 30% is going towards your want, and 20% is going toward your savings. So we're going to go into that a little bit more. And then there's a zero-based budgeting, an envelope/cash method, and then is pay yourself first approach. So those are the most common ones. So the 50-30-20, as I said, is the 50% is going toward your needs. And that's like housing, utilities, groceries, insurance, um, and then 20% is going toward 30% is going toward your wants. Anything that you can live without, anything that is not part of your essential needs or your essential expenses is a want. It's a dining out, is going to the movies or attending a concert or going shopping to the mall. Those are wants that if you didn't have them tomorrow, you will still survive, unless you're someone that really needs to go shopping and that's part of your life. um, but that's how I would look at it. I would divide it in those: 50% are your needs, 30% are your wants, and then 20% goes toward your savings and payment debt. And when I talk about percentages, I'm talking about your income. The income that you make on a monthly basis or biweekly basis, 50% of that need, 30% want, and then 20% savings, or paying down your debts and building the emergency fund. So this is mostly for people that just want a simple, big picture framework of tracking their expenses. And those are the three categories that you can break them down. The second most common one is the based budgeting. It's where you're saying, okay, my income is $3,000 and I'm going to allocate every single dollar that I'm making into a category. So four categories here are spending. And again, I want to divide the spending into two different categories. One is are your needs and essential expenses, and then the other one is wants or a lifestyle spending. And then you can divide it into that. For example, in this budget, my income is $3,000. Rent, utility, groceries, everything is paid for. I'm gonna spend $150 dining out. I'm gonna use $100 for entertainment. Again, I'm going to a concert or the movies, going out with my friends. $100 shopping with clothing or shoes, and then your savings are and your debt payments are allocated accordingly. And then at the end of the month or at the end of that biweekly paycheck, if you get paid every 2 weeks, your balance is zero. So you've given a dollar, every dollar that you make, you're giving it a job. The third method about budgeting is the envelope cash method. And I know this has been around a little bit longer because older generations have used this method before apps were into existence, before we had smartphones and we had online banking. So it's basically physically having envelopes where you can put in there cash that's allocated for that particular expense. It could be groceries or dining out, transportation, and savings. And with the technology and the advancement in technology that we have today, you can actually use applications to do that. For example, you have Cash App, for example, where you can transfer money from your regular checking account into a Cash App account, and then your Cash App could be the account or the envelope that you use for dining out or buying groceries. So it's just dividing them into envelopes or dividing them into digital applications where you can separate the money into various categories. And this is good for people that tend to overspend. If you have the same account for groceries and paying rent or dining out, the spending, it's commingled all together. So it will be harder to differentiate, okay, how much money have I spent on dining out versus grocery, unless you go through a um, one transaction at a time. And it's also good for people that tend to do better visually and for those that also that like to use physical money instead of just a digital transaction. So you can do the physical, or you can also do that digital management of your income. And then the last one I want to talk about is the pay yourself first. So I used an example here. Let's say you make $3,500 a month. Before the money even hits your checking account, you are going to allocate $300 to your emergency funds account and then $400 to your retirement account. Then the money can be the remainder can be deposited in your checking account, where you can now divide, okay, I'm going to divide my income into essential expenses, my rent, utility, groceries, transportation, and then whatever is remaining, those are going to be my wants. I'm going to go dining, entertainment, and so forth. So that is just, I know some of us, when we receive a payment or a paycheck before uh, the cash is even deposited in our checking account, this has already been a transfer in the back end, when some dollars are going into our retirement account, some dollars are going into a health savings account, and some dollars are going into a savings account. So before you even get that money into your checking, you can actually work with your employer to make that distinction before the money is deposited in your checking account. And this is also for people that are really focused on building wealth and long-term goals, and may struggle with saving consistently. Because Jennifer and I actually, we were having a conversation before we started today, and that saving consistently is what sometimes we don't um, do a good job on doing, because it's something that we have to make time to do and go in and transfer the money, and just staying consistent may not be um, as suitable, especially if you work long hours or if you don't have enough time during the day to do that. So before I continue, any comments, any questions, any reactions between those um, different budgeting methods? Okay, so then I'm going to ask you a question. Then, which budgeting method you think, based on what we went over, will work for you? So Jennifer, that I know, sorry, the questions changed. That so we'll just can we just remove the poll, and then just, if we can have participants just provide their feedback in the feed, and then based on what you see, if you can you tell me what's the budgeting method that will work the best for participants?
Yes, of course. I also have that poll as well. If
Okay, there. Okay, thank you.
Yep.
Is the 50-30-20 rule better for you? Zero-based budgeting, or just having money in your envelope, or in on a application? Do you see yourself paying yourself first approach? Like, what would be the one that will work best for you?
Okay, I'll give it a few more minutes on the polls. I mean, a few more seconds on the polls. Some answers coming in. Also, feel free to drop it in the chat if that's easier. Okay, here are the results.
Thank you. Okay. So the pay you first approach, and then 50-30-20 rule. That's awesome. I think for me also, I will fall into the one for pay yourself first, and that way is something that it's out of my mind. I don't need to deal with it. It's saved, and I don't have to think about it. But The other ones are really interesting as well, depending on what works for you. Thank you for taking the time to respond. Um, so now that we have, okay, an understanding what's a budget, what a budget is not, and different methods of budgeting. Now I want to go into the essentials of building your budget. So as we go through the next slide, just think about the budgeting method that resonates more with you, or the one that works best for you. And then you can think about, okay, how do I build my budget accordingly? But let's just talk about now, okay, what does it take to build a budget? And whenever I work with individuals, these are the components that I highlight when we are putting together a budget. First, it's understanding your income. Um, you can do a budget for a 2 week budget, or you can do a budget for a month, or you can do a budget for 3 months, depending on what works best for you. But during the presentation today, we're just going to assume that we're doing a monthly budget. So a monthly budget will include your monthly income, will include all of your essential expenses, and we'll go into a little bit more detail what those are, but we already have an idea based on our previous slides. What are your non-essential expenses? How much money you need to save and invest to achieve those goals? So if you need to save money to travel, or you need to save money to for school, or you need to save money to achieve a particular goal, that's where you need to understand. And only you will know that is how much money you need to save on a monthly basis. And I think we already have a webinar where I think in a couple of weeks, we're going to have a webinar to saving toward a goal. So that's something that's going to come up in more details later on this month. And then you can also allocate a budget item or component for investing, and that is investing for your retirement or investing for a non-retirement account. And then debt repayment for a car loan, credit card. So those are the 5 components that I will keep in mind when we build in a budget. So how do I develop those components? How do I know how much do I have in essential expenses, and how much do we know what we have in a non-essential expenses? So the first step that you will take is download a bank statement or a credit card statement, um, and then go through the transactions. And I will recommend you just take a full month. Um, it could be August or June, July. Just take a month that will give you a monthly view of your expenses. And then you're going to list them on a tracker or spreadsheet or on a piece of paper. And then you will going to categorize each transaction based on the particular expense that you are tracking. So for example, if I have Verizon Wireless here, then that's going to be a um, a utility bill or my phone bill. I went to a restaurant, that's going to be my dining out transaction. I went to a grocery store, that's going to be my groceries. So you're going to take all of the transactions that fall into those particular descriptions. You're going to list them by the dollar amount and then assign that category to every transaction. And then I include here a payment method because it will be useful to understand, do I pay online? Do I mail a check? Or do I go in person to pay? So that way you can organize your monthly finances and understand how you actually pay for that particular expense. And then after you understand, okay, how much I've spent on each transaction, what are the categories for those transactions, then you're going to assign that budget component that we went over a slide before. Are there essentials, non-essential, debt payments? And then you're going to assign that particular component to that particular transaction or that category. essential, non-essential. So first is tracking, understanding what has happened, what I've spent money on, listing them, assigning the category, and then the budget component. Once we have already done that, then we can start building the budget. So this is a budget template that that I usually use with the people that I work with, is that you're gonna list your income and say, okay, based on my tracking exercise, how much have I actually received from my job or my part-time? And then you're gonna add up, okay, how much have I actually spent on my essentials slash needs? And then you're gonna do the same for your non-essentials, where you're gonna add all of those transactions and you're gonna put the total here. And then you're also gonna add up the savings and debt repayment. Again, and then the plan comes into play. It's understanding what your goals are. So one, if you don't have a lot of savings and your goal is to save, then you'll need to increase then your savings account or your savings amount. And then your plan is going to show that particular number that you're planning for. And then you're going to say, wait a minute, I don't make enough money, or I don't think I have enough money at the end of the month to actually increase my savings or increase my debt repayment. And that's a really good question, and also a good and completely normal feeling. So I'm just going to walk through an actual budget here with made up numbers. This is a made up person. So Annie's budget looks like this. So Annie has two jobs. She has her regular day job, and then she has a part-time job or a job that that she may not do on an everyday basis, but maybe it's on weekends. And then if she makes extra hours, then she made $400 in this particular month. So her total income is $3,000. Her essential expenses add up to $1,585, $1,585. And then based on the tracking that she did, she spent $100 in health and fitness, eating out, entertainment, and that amounts to $900. She also has a credit card payment for $175, a car loan for $125, and she's actually saving toward her emergency funds. So then I will total up her monthly income, how much she's saving, essential expenses, and so forth. And then we notice here that, wait a minute, at the end of the month, she's negative $85. So if I can get some reaction from participants, what do you think Annie could do to adjust the deficit of $85? What will you do? What will you recommend to Annie? And Jennifer, if you don't mind, just maybe just sharing some of the responses, that will be great.
Definitely.
So what can Annie do if she wants to increase her savings or increase her credit card payment, her car loan? What are the things that she could do to accomplish that when she's already negative $85 at the end of the month?
Some recommendations are eating out less, not eating out, reducing spending on wants, cut back on non-essentials, and to apply to debt more, cut back and redo your budget.
Great answers. Thank you so much. I think they're very good answers, and I will recommend the same to Annie. So let's assume that this is your budget. You went through the tracking process, you went through your bank account and your credit card spendings, and you added everything up. And then at the end of the month, you saw, well, I have a negative. You may be in a situation where you're not even making enough money or having enough money at the end of the month where you're saving. So this is how we'll approach this budget deficit. So let's assume that we want to increase savings another $100. So we're already negative $85. So now we need to increase our savings by $85. So that means that a category here needs to be reduced by $185. So let's say, okay, Annie says, you know what? I spent $600 eating out. That's an easier category to reduce, maybe. And say, instead of spending $600, I'm just going to spend $600 minus the 85, and I'm just going to budget $415 next month eating out. So the additional $185 that I'm saving, 85 is going to go toward addressing this deficit that I already have. And then the $100 is going to go toward my goal of increasing my savings, another $100. So it doesn't mean that Annie stopped eating out. It just meant that she had to reduce her eating out by $185. You could reduce the 100 eating out, or you can do a combination of different
Mhm.
expenses. You could do reduce eating out and then reduce entertainment as well. Any other comments or questions or feedback? Another option that Annie could have is, okay, maybe what if I worked an extra few hours and increase my income? Um, just to address saving, the increase in saving. And it could be something that it's not done long term. It could only be, I only need to save an additional $100 for the next 6 months. So the extra hours or the reduction in eating out will be only for 6 months. So that's why budget, it's not one that you set up and you set it aside. It's something that you address on a monthly basis, weekly basis, or bi-weekly basis. So again, I want to leave it a little bit here, a little longer. So, because I want you to picture, okay, what if I went home today and I put together my budget? How would I approach it? What if it looks like this? Then again, you're gonna go back and look at the categories that you can adjust or that are easier to reduce. And it's not something you're gonna do long term. It's something that you're gonna do only until you achieve the goal that you have, which is I need to save for an additional 6 months, $100 a month.
We have a question here. How do we get the percentage that is inside the white squares? Um,
Great question, and thank you for asking it. So I put this here because it ties back to the budget of 50, 30, 20. So you basically take your $300 and you divide it by your income. So what this is showing is that 10% of your income is allocated toward your savings. You take the 1,585 divided by the 3,000, and that means that 53% of your income is going toward your essential expenses. So it will be dividing the total of the expense divided by your monthly income. Great question. Thank you for asking. So at the end of the month, you want your budget to be $100. And that means that you have allocated every single dollar, you have given it a job. So yeah, so this is just to tie it back to what if I just want to spend 50% in essentials, 20% savings and toward debt, and then 30% towards my want. Any other questions or any other comments on this budget?
no, not at the moment.
Another thing that I want to highlight or recommend, and it's tying it back to um, the different methods of budgeting, is that um, you can automate this emergency savings before it even hits your account. You can automate the credit card payment and you can automate your car loan payment. So those are things that you can already automate. Another thing that I also want to share is that if you are someone, or you know someone that um, it does not do a good job of controlling spending on a month to month basis, or it's the keeping track or staying within a um, component of the income or the component of your budget, it's complicated. What you can do is open two separate accounts. One is for your essentials and your needs. So you're going to have a checking account for your rent, your electricity, your internet. So every month you're going to allocate $1,500 in your checking account to pay for your expense, for your essential expenses. And then you can have a separate account. It could be, again, I say a Cash App account, or it could be a separate checking account where you use a debit card for that particular account. And that's going to be for your non-essential expenses. And you know that every month you only have $900 that you're going to spend in that particular account. So you have an account for your essential expenses, another one for your needs, I mean your wants, and then you have your savings and your investing or your investment accounts. So there's also an approach that you can take as your budgeting. You can have different accounts to allocate um, for different needs and expenses. Okay. Okay, Samanda, that's great. I know I need to budget. I know what I need to do to build a budget, but how do I stick to it? And I know it's easier to say it than actually do it. So I want to offer four different um, suggestions that you can take today to actually stick to the budget. It's to automate anything that you can. As I mentioned earlier, just automating your savings, but also any kind of investments that you want to establish or that you already have. So automating those things is really key, because that way it's something that you don't have to think about. It's something that you don't even see come through, that you need to budget for. It's already budgeted for and it's automated. You can automate bill payments like your cell phone, your electricity bill, and that way you can avoid late fees and any surprises that, oh my gosh, I forgot that I needed to pay my phone on the 15th. So that way it's automated, it's done for, and you avoid paying late fees or risking your credit score to be impacted because you're not paying on time. You can use budgeting tools like a Monarch, Every Dollar, and Know Your Budget. I think those are ones that I've seen people use the most. Um, if you're someone that just likes to use a spreadsheet like me, then you can do that, or you can just grab a paper and a pen and just write down expenses and how much you pay for each one of them. Um, so just having those tools to understand where your money is going, and going back and then reviewing where it actually went, and to ensure that you've spent the money in a way that you feel comfortable, but also in a way that you have intended to spend it when you did the budget. And then I will definitely check your um, finances. I don't know if that's your bank account or your credit card statement, but you want to do that once a week. If you can't once a week, at least on a monthly basis. Maybe it's on a Saturday morning where you take at least a few minutes on a Saturday morning just to review, okay, what's coming up, what have I already spent, how much do I have to spend, how much do I have available to spend on my wants. And then that way you can address overspending early, instead of having to go back and deal with the fact that I have already overspent this week. So I don't have enough money to save or to do the things that I really wanted to next week. That way, when you do it early, you can adjust accordingly. And the last thing that I'm going to do, and I know we don't do that often, is to build a fund or an account or savings what is for you to do things that are fun for you. If you're someone that enjoys um, going out with friends on a weekend, so just build enough money in your budget where you can spend going out with your friends. And that way you don't feel guilty that you're spending money that needs to go to a need or a bill. It's something that you have already planned for. And that way you also feel that it's not too restrictive or that you're feeling stressed because now you don't have enough where you can enjoy the life that you're working so hard to build. So building that fund money, it's also one that I would recommend. Like I've had clients that I work with that I really enjoy collecting things. So um, be it a baseball card or different antiques. So building enough money there where you can spend money on eBay and buy the things that you want to collect that is will make you better feel better at the end of the month. So before I end and leave a few minutes to answer additional questions, I want to just go over the key takeaways for today. And the first one is understanding where your money goes. Going through that tracking process is a daily, weekly, or monthly. It's really key. So understanding where it goes is key. And then decide what's a budgeting method that works for you. And maybe there isn't one budgeting method, maybe it's multiple. Maybe you start with one. If it doesn't work, then you move to the next one and then find one that works for you. Um, and just start today. Don't find the perfect moment. Don't find the perfect month to start. Just start today, and then you can adjust as you go through the month. But just starting is the first step into making any changes and adjustment in your finances. And remember that budget, it's not a restriction. It actually can give you freedom, freedom to understand where your money's going, freedom to allocate the way you want your money to work for you, and freedom to achieve the goals that you have for yourself and your family. And it's about prioritizing the things that you enjoy and the things that you want to spend your money on. And it's not a punishment to you or your family. It's something that it's you rewarding yourself and you're setting yourself uh, to be more independent, more control over your money, and the money working for you, not you working for your money. So I want to spend a few minutes now and ask anyone if you have any questions, any additional comments, any situations that you can of budgeting that you can share with us, any comment or feedback, that will be great.
Okay. Thank you, Samanda, for that great presentation. I'll let people go ahead and drop any questions they may have in the chat while I do some wrap up, if that's okay.
Yeah, so one thing that Jennifer there I want to say, so remember that if you have any specific situations or specific questions that you have the opportunity to schedule a one-on-one financial coaching session. And during those sessions, we'll go into more details of any challenges or any goals that you would like to achieve. Thank you.
Thank you, Samanda. And just to wrap up on what we have coming up next week, as mentioned, we have Financial Foundations Mastering Banking Basics. So that's going to be all about, how to open up the right accounts, savings, checkings, and really how to make the best usage out of these accounts and navigating, all of them as we budget, as we save, and, all these financial complexities. So you can scan here or you can click the link that'll be in the chat. As mentioned, 1 hour of free financial coaching with Samanda, where you can ask all your personal questions. You can even go through your budget with her and get some insights, some advice just on where to cut, what to do next, or anything revolving your financial well-being. And last but definitely not least, here at OEE, we partner with a platform called Enrich, where we have a variety of financial education resources from mini courses, videos, blog posts, you name it, it's there 24/7 to help you navigate your finances, from developing a financial mindset to so much more. So we always encourage you all to create an account and check it out free of charge. And I am seeing some comments here. Great presentation. We have the links um, here for you to register for next week, but no further questions, Samanda, for you. So good.
Yeah, thank you so much, everyone. I appreciate your feedback and the questions and the engagement. So thank you for again for taking time out of your day to attend today's webinar.
All right. Yes. Thank you, everyone. Have a good one. See you next week. Bye.